This is Barry Zalma speaking for Claim School Incorporated's blog, Zalma on Insurance. Today we're going to talk about breach of contract. And there can be no breach of contract, no bad faith against an insurer, unless there are actual damages incurred by the plaintiff seeking compensation from an insurer for breach. Ira and Patricia Potovsky bought an insurance policy for long-term care from Lincoln Benefit Life Company in 2002. They sued Lincoln after it denied them coverage. The district court dismissed the case because the complaint failed to allege damages. In Ira Potovsky and Patricia Potovsky versus Lincoln Benefit Life Company, the United States Court of Appeals for the Ninth Circuit on January 7, 2025, applied the law. The Potovskys' policy covered actual expenses incurred for qualified long-term care should one of them become chronically ill, which the policy defined as requiring substantial supervision to protect themselves from threats to health and safety due to severe cognitive impairment. The policy only covered those who had been receiving quality and qualifying care for 90 days or more and then submitted a claim for reimbursement. Mrs. Potovsky began to experience mental decline in her 80s. Mr. Potovsky contacted Lincoln to begin filing a claim under the policy in September of 2022 because he intended to hire a caregiver for Mrs. Potovsky. Out of caution, Mr. Potovsky first asked Lincoln for a determination of Mrs. Potovsky's eligibility. Lincoln denied the claim. In its denial letter, after summarizing the medical record, Lincoln determined, quote, the supervision does not rise to the level of substantial supervision secondary to severe cognitive impairment as per the policy definitions, and there is no clear indication that Mrs. Potovsky requires supervision on a continuous basis. While the medical documentation on file does support Mrs. Potovsky has a cognitive impairment, there is nothing in the file to support the cognitive impairment is severe and requires substantial supervision, and therefore the claim will now be closed, close quote. Although the Potovskys internally appealed this denial, Lincoln's decision remained unchanged. The Potovskys filed suit. The district court predicted, quote, the breach of contract claim ultimately may be better suited as an anticipatory breach claim, which the plaintiff's opposition seems to suggest, close quote. The Potovskys added a claim for anticipatory breach to their original suit and claimed that Lincoln's denial confirmed it would not perform under the contract and that this repudiation excused any lack of additional performance. Lincoln moved to dismiss again because the anticipatory breach lacked the element of damages. The district court granted dismissal with prejudice. The elements of a cause of action for breach of contract are 1, the existence of the contract, 2, plaintiff's performance or excuse for non-performance, 3, defendant's breach, and 4, the resulting damages to the plaintiff. In short, the Potovskys failed to allege any recoverable damages, an essential element of a breach of contract claim. Damages are an element that must be proved to prevail on the merits of a contract claim. Damages excluded from coverage by an insurance policy are typically not within the contemplation of the parties. The Potovskys' only alleged damages are in the form of home health care services that Mrs. Potovsky would have received had Lincoln acknowledged her entitlement to be reimbursed for supervised care or in the form of care provided by Mr. Potovsky. Care given by a family member was expressly exempted from the policy's coverage, and therefore Lincoln's denial letter and its course of conduct were not inconsistent with an attempt to enforce the right to wait until expenses were actually incurred. The Potovskys' two other claims, bad faith and elder abuse, cannot prevail without a predicate breach of contract. And since Mr. Potovsky spent no money, hired no caregiver, he incurred no damages against the policy. In my opinion, people and some lawyers forget that an insurance policy is a contract. In this case, the breach of contract claim failed because the Potovskys incurred no damage, because Mr. Potovsky wanted assurance or didn't have the funds before spending money to care for Mrs. Potovsky. The Potovskys incurred no damages with regard to the contract and could not therefore prove a breach of contract and claims of bad faith. This video was adapted from my blog, Zelma on Insurance, which is available free to anyone who clicks on the URL zelma.com/blog. Please tell your friends and colleagues about this blog and the videos, and let them also subscribe. And if you subscribe to the blog, you'll receive notice of every blog posting, usually 5, sometimes 6 a week, and you will have access to the more than 4,950 blog postings. The videos are free and you can subscribe as well. And if you're interested in additional information about insurance, insurance claims, insurance fraud, and insurance law, please consider, for a very small fee, subscribing to my Substack publication. Thank you for your attention.